Welcome to this webinar on the ASI Chain of Custody Material Accounting. My name is Rhiannon Prescott and I'm the ASI Educational Manager, and I'll be moderating this session for you today. In the next 25 minutes, Klaudia Michalska, ASI Supply Chain Analyst, will walk you through the essential requirements of the ASI Chain of Custody Standard, focusing on material accounting and a custom-developed tool that's been designed to assist ASI members to efficiently track and manage CoC materials. Klaudia will then provide a live demonstration of the tool, followed by an interactive discussion and Q&A session. And I'm going to hand over to you, Klaudia.
Thank you, Rhiannon, and thank you everyone for joining this webinar. We will first start with some background information. So at ASI, we have two standards, the ASI Performance and Chain of Custody Standards, which set requirements for the responsible production, sourcing, and stewardship of aluminium. And these two standards, they form the basis of the ASI certification program. The performance standard defines environmental, social, and governance principles and criteria, addressing a broad range of sustainability issues in the aluminium value chain. And the chain of custody standard, which of course we will focus on today, enables a link between verified practices at successive steps of the supply chain under the ASI performance standard to the products produced by ASI certified entities. And the CoC standard sets out requirements for the flow of chain of custody material, which is including ASI aluminium, through the whole value chain, with assurance of responsible production at each link in the chain. And the CoC standard complements the ASI performance standard, and therefore the certification against it is voluntary for ASI members. To be able to control and account the material and volumes coming in and out of an entity, each CoC certified entity is required to set up a material accounting system. And this, of course, may be a standalone systems within your organization, or they can be integrated with purchasing, inventory, or other internal systems. And the purpose of entities material accounting system is to ensure that the total output of CoC material or eligible scrap does not proportionately exceed the input percentage of CoC material or eligible scrap over the material accounting period across the whole certification scope. Next slide, please. Now, let's go to the core of the webinar and let's discuss key elements of the material accounting system that are needed to fulfill the CoC standard requirements. First and foremost, each material accounting system needs to record information on incoming and outgoing shipments. So this is our input and output quantities of each CoC material and non-CoC material type. So this is bauxite, alumina, aluminium, and scrap, to and from the entity's certification scope. So this is all facilities that are certified under one CoC certification. And all records should specify the mass of material, preferably in tons, as when the time comes for entities to submit the annual CoC report to ASI Secretariat, the quantities of each material need to be provided in tons. The other information that needs to be recorded in the system is the CoC material intra-entity flows and non-CoC material flows between supply chain activities. So, for example, if an entity has certified mines, refineries, smelters, and cast houses, the movement of material between these facilities, so for example, movement of bauxite from mines to refineries or alumina from refineries to smelters, must be recorded in the system. However, the movement between facilities with the same type of activities, so if we take, for example, movement of aluminium between cast houses, these movements, they do not need to be recorded in the system. Also, the important information to include in the material accounting system is, of course, the reference numbers for the chain of custody documents of each shipment. unique identification numbers of cast house products, positive balance that is drawn down in the current material accounting period, and positive balance refers to the unsold material from the previous year and can be carried forward to the current year. Also, the internal overdraw and mass of allowing elements introduced at cast house to be able to calculate the output quantities that can be designated as CoC material. And this is in particular in situations where aluminium alloys have an alloy composition greater than 10% of the total production mass. So these are the main points which can support mass balance reconciliations by the end of each calendar year. Next slide, please. To support entities with the mass balance reconciliations, particularly those entities with certification scope encompassing multiple types of CoC material, ASI has published a booklet providing the relevant material accounting formulae, specifically input and output percentages across entity certification scope. And the guide is available on our website to be downloaded. Over the years, we've heard from many organizations that they would like more guidance on how to actually build their material accounting system. And to address this and to support CoC certifying entities in building their own material accounting systems, end of 2022, ASI developed a CoC material accounting tool, which is called CoC MAT, and through which we will go in a short moment. And the tool was designed to be ready to use for all types of entities, regardless of their size and position along the aluminium value chain. And entities can choose to use the tool to record incoming and ongoing shipments of material and other relevant data, or just simply take it as an example to know which elements to include in their existing systems. So the use of the tool is optional. Yes, so now let's have a look at the tool together. As I've mentioned, the tool can be used by everyone, no matter whether you are an integrated company and have certified mines to cast houses, or are a small company with only cast houses or post-cast houses under your certification scope. The tool was developed in Excel, so everyone can have an access to it. And once we open the tool, as you can see on the screen, we have several tabs. So we have instructions. Then we have an example of how to appropriately record all data. We have tabs for each month where the data should be recorded. We have an annual reconciliation tab where all data is pulled automatically from the month tab, and where material volumes are reconciled. And last but not least, we have annual reporting tab, where the annual report is generated, also automatically, and ready to be submitted to the ASI Secretariat to fulfill the requirements of the criterion 1.7 of the Chain of Custody Standard. With this overview, let's have a look how to record the data. So if we go to January tab, as you can see, we have a table, and each row corresponds to one shipment. Some of the fields are mandatory to be filled to ensure the proper functioning of the tool. And especially the annual reconciliation tab and also the annual reporting tab. And these fields will be highlighted once we start and choose our supply chain activity for which we would like to record material shipment. So let's just take an example of an entity that we would like to record the shipments for. So let's have an entity with smelting, recycling, and cast house activities. So starting from smelting, so we can choose the electrolysis activity. And as I've mentioned before, once we choose the supply chain activity, then these mandatory fields that need to be recorded are highlighted in yellow. So let's go through each of those fields. So for the material type, we have a drop-down list and we have a list of different materials. Let's go with alumina. Then we have the transaction type. So this is the movement of our material. We have purchases, we have sales, and also we have our intra-entity flows. So in this case, let's go with a purchase of CoC material. And then we have material volumes. So let's go with some example number. And then, then we have material transformation, and which refer to the production volumes. So what we need to insert here is how much volumes in this case, it will be aluminium because we purchased some alumina. So how much aluminium we produced from these volumes. And the volume that we insert here, they're supposed to refer to all the volumes that we have available during this 1 month. So let's just insert again some number. And then below, what we also need to select is the type of transformation. So in this case, of course, it will be alumina to aluminium. And next to it, we have a column which is automatically calculated for us, which is the yield factor. And this factor will be also later used in our annual reconciliation. So let's go to record the next movement of the material. Let's go with the recycling, like I've mentioned before. And actually here I would like to draw your attention that the table is divided in different sections. So it is advised to record the movement of the material for different supply chain activities in separate sections. So, for example, if in the first section we've started with electrolysis, then this is advised to continue to record the shipments within this activity just in this section. And if we want to record something in the next activity, then let's do it in the section below. So here, let's choose remelting, refining. And again, as we can see, the mandatory fields are highlighted. And we can select the material type. We, of course, have pre-consumer scrap, post-consumer, and also the mix of pre- and post-consumer scrap. So let's go with this one. Again, we are told to select the transaction type. Again, let's choose purchase of eligible scrap. Let's insert some example number. And here, similar to the situation above, we need to type how much aluminium we produced from scrap. So let's put some example number. And here, of course, we have from the drop-down list, in this situation, we need to choose scrap to aluminium. And actually, if we're gonna move the table a little bit to the side, this should be, then we would see that actually there's another field that the tool tells us to include. This is because under material type, we selected mixed pre- and post-consumer scrap. And the chain of custody tells us that in situations where an entity receives a shipment of mix of pre- and post-consumer scrap and the invoice documentation, the CoC documentation does not specify the content of each of the scrap, then the entity needs to visually estimate what's the post-consumer scrap content percentage. So once we do it and let's say put 80, so the number that was actually already filled before, then we can see that the tool automatically calculates for us what's the pre-consumer scrap volumes and what are the post-consumer scrap volumes. And these numbers are later used in the annual reconciliation calculations and also in the annual reporting. Moving on to the next supply chain activity. So like I've mentioned at the beginning, let's go with cast house. And as you can see, also I'm recording this, the shipments I'm recording in the next section, not over here. Let's choose some material type from there's a long list. Let's just go aluminium. And here, instead of purchases, let's this time select that we sold some CoC material. Here, let's also put some example number. And actually, again, if we move the table to the side, there would be another column that the tool tells us to fill, which is the mass of following element. This is because some of the entities, they add alloys to their aluminium. And we can insert the number here, and the tool will also automatically calculate some fields for us, which is also later pulled to the annual reconciliation tab to actually calculate how much of a mass we can design as CoC. And before actually moving further, just for the purpose to show you a little bit more detail in the annual reconciliation tab, actually I will add some more shipments over here very quickly. So here I will also, this time, let's choose purchase of non-CoC material, and then again, example material volumes. And here actually I will update the production volume of aluminium from alumina as well, because if you remember at the beginning, I said that this production volumes should refer to the availability of the material within 1 month. And as I've added some volumes here, then yeah, let's update it. And then also let's add some more shipments under cast house. Let's do simply again aluminium. And here let's select some purchase. And then also let's add some sales, but this time we can add sales of non-CoC aluminium. And let's add also some example number. And I will show you this in a moment. All this information will be pulled to the annual reconciliation tab. But before that, once we scroll the table a little bit down, then there's another table which there's a place to record information if an entity chooses to use the services of outsourcing contractors. And here, of course, also the entity is required to record some information, and the table is similar to the table above. Once we scroll even further down, then this section is populated automatically based on the data that we've inserted above, and it shows monthly material reconciliation across all activities by type of material. So as we can see, we have our bauxite, we have alumina, liquid aluminium, we have cast house products, semi-fabricated products, and also a little bit to the side, we have scrap, of course, if an entity deals with all of those materials. And the tool shows us how, what volumes, what quantities of specific material our entity purchased. So we can see how much CoC alumina we purchased within that month, or non-CoC, what was our actual maximum availability of CoC and non-CoC alumina, and there's also a section on sales. And like I mentioned, this is for all material types. If we scroll even further, then there's a monthly CoC material flows input and output percentage reconciliation based on specific supply chain activities. So this is and all of the month tabs, of course, they are exactly the same because they are designated for the material shipments to be recorded in specific months. And at the end, I think let's just check. Yes, because I just noticed that here, yeah, we have some warning message. It's because I didn't add any sales of non-CoC material. So actually, let's change this purchase of non-CoC material to sales of non-CoC material. And let's go to the annual reconciliation tab. So this tab actually it's very useful at the end of the year and also before an entity sends the annual CoC report to the ASI Secretariat. And very important sections here are those tables at the top, which show input and output percentages across certification scope of an entity within one material accounting period, which is 1 calendar year. So as we can see, we have here CoC material output percentage. Here we have CoC material input percentage. And based on the records that we included in the January tab, we can see that the output percentage is lower than the input percentage. So basically, we fulfilled the main requirement of the CoC standard that says that the output percentage of CoC material or eligible scrap cannot proportionately exceed input percentage across the whole scope. Here on the right, we have also automatically calculated yields of the material, which are used in the backend calculations by the tool. And below, the table also shows the material reconciliation, annual reconciliation, similar to the reconciliation that we already saw on the month tab. Here it's only, of course, done it in the for the whole calendar year. So also we can see how much of specific material we purchased, how much we sold, what was the maximum availability, etc. So here, as a user, we don't need to include any new information. Everything is generated automatically. The only fields that we need to select is some information about force majeure situation or positive balance. If we scroll down a little bit further, then there are sections on the alloys, which is also generated automatically. And here there is a section on positive balance and internal overdraw. And these sections, if an entity chooses to use positive balance or internal overdraw, these sections also have to be recorded. And lastly, going to the annual reporting tab, which is here almost at the end. This tab generates, again, automatically the annual CoC report, which needs to be sent to the ASI Secretariat. And all the information is pulled from the annual reconciliation tab and also the monthly tab. And it basically, the report includes all supply chain activities. And also there are all data points that needs to be submitted to the ASI Secretariat. And actually, if we scroll down, because we didn't record any mining activities, also none of the refining activities, but if we scroll down, we have smelting, and we can see over here, then the tool automatically calculated and filled the information over here. The same is for recycling, also cast house. And at the end, there's also input and output percentage across the certification scope. What is also important, because of course this is an Excel tool and sometimes some errors might happen, Important thing is to always, before sending the report and before actually finalizing everything, it's important to review the annual reconciliation tab. And the first indication would be like actually you saw at the beginning, if this one was different, it was not sales, it was purchases, then it might happen that the basically of all the material that we purchased and all the material that we sold to other entities, it might be situation that the material CoC material output percentage across whole certification scope is higher than the input percentage. Of course, this cannot happen because there are rules under the chain of custody standard. But if we make a mistake in recording the data, the tool will signal this to us with this message. And what is advised, first of all, to once we see the message, to go over here and look at the CoC and non-CoC purchases and sales, material by material, and in this way we're gonna see where might be some errors, and after we identify this, then we can go to specific tabs and look for an error. So this would be it to go through the tool. And now let's move on to questions.
Thank you, Klaudia, for that very informative demonstration. So we have a few questions in the Q&A box. Please feel free to keep popping those in. The first question that we have is, my entity received many shipments in 1 month. Can I add new rows to record data?
Yes, so if we go back to the January tab where we looked and when we recorded our shipments, as I mentioned before, yeah, we have those sections here. Then it was advised to actually record each activity in a separate section. But if it happens, like, yeah, we received the question that if we already had, I don't know, yeah, we had so many shipments and we have even more. The thing that it needs to be done, just basically add one more row, and the tool automatically updates everything. Nothing needs to be adjusted. Everything is included in calculation. And yeah, that's it.
Thank you very much. Okay, another question that we have. If my entity has many transactions in 1 month, more than 100 shipments, do I have to record each of the shipments individually, or can I record the aggregated amount for the month? Perhaps aggregated amount for non-CoC material, but individual record for CoC material due to the ASI chain of custody document reference number? Or may I insert the aggregated amount based on supplier customer?
First of all, under the chain of custody standard, because this is the tool to actually support entities to build their own material accounting system. And according to the standard, all shipments should have the chain of custody documentation. So it is not advised to record in the material accounting system the shipments in aggregate. Because, yeah, especially for the chain of custody material, if you also receive the shipments from different entities, then the chain of custody documents and the reference number for each shipments are different. So for the auditing purposes and for the proper annual reconciliation, it is not advised to include in aggregate but shipment by shipment.
Thank you very much, Klaudia. So the next question we have is, if we sell scrap, in which supply chain activity is it appointed? Is it a reduction on raw material input or aluminium sales on post cast house?
Yes, so if an entity sells scrap, it depends what supply chain activities are already included in the certification scope. there are two possibilities. It can be recorded either under cast house if an entity have, of course, cast house activities under their certification scope. So we can select here cast house. We can select also over here pre-consumer scrap. And here will be sale of CoC material eligible scrap. And of course, here we would type some material volumes, but as well, it can be, again, if an entity has post-cast house activities under the certification scope, we can record it here as well.
Thank you. So the next question we have is, my entity received many shipments in 1 month. Can I add new rows to record data?
Yes, I believe this question was already answered. It was, I think, the first question, but yeah, if here we have like a lot of shipments and of course we need more, we just go to the home section over here and we just insert new rows, and we don't need to do anything else. Everything is automatically, all the formulas and all the calculations are done in the back, so we just add new rows and that's it.
Thank you very much. The next question, is there a place to add a positive balance from last year?
Yes, positive balance is to be added under the annual reconciliation tab. So if we go to the annual reconciliation tab, and yeah, you can actually see that we were adding some new shipments, and yeah, here is this example that yeah, if our output percentage is higher than input percentage, that the tool will let us know about this. So this is very important actually section to look at. But coming back to the question, where to record positive balance is under annual reconciliation tab, and here at the very, very bottom there is a section on positive balance. So the first part is positive balance carried over from last year. And here we have different material types, and depending which material type we would like to carry the positive balance over from the last year, then of course we insert some numbers over here. And so this is, yes, from the last year. And then also what we need to do is in this section below here, how much of this positive balance that we carried over from last year, how much of this material we used this year, so how much of it we sold as CoC material to our customers. So both of those sections have to be filled if we would like to use positive balance.
Thank you. The next question, after selecting the supply chain activity, only the material, transaction, and material volume are highlighted, indicating the mandatory field. But how about the other columns, such as the reference number, date of shipment, supplier, or destination? Are they optional for filling in?
Yes, so that's a very good question. So if we choose here, of course, there are only some of the fields are highlighted to be recorded. These highlighted fields are required for the proper calculations for the annual reconciliation tab and for the annual reporting tab. So, for example, if I would select something here and I would also insert something here, but I forget to select something here, then yeah, the tool will probably calculate some data incorrectly. When it comes to those fields in white, under the chain of custody, they are also required to be recorded in the material accounting system. However, in this specific tool, they are not required for the calculations to work. So, of course, for your own records and for the audits, all those information, it is required, especially the CoC document reference number. But for the functioning of the tool, yeah, the fields are not mandatory.
Thank you, Klaudia. We have another question. Is there a manual on what supply chain activity should be chosen with the transaction?
So under ASI Chain of Custody Standard, we have already supply chain activities defined. So this is bauxite mining, alumina refining, aluminium smelting, remelting, refining, then is cast house and post cast house. These are the activities, and these are also the activities which an entity chooses when makes self-assessment before getting CoC certified. However, when we look in the tool, this was actually the supply chain activities might slightly differ than those what we have prescribed in the standard, and this is only for like to have users more familiar with the activities that are done within the entity. So of course, bauxite mining is the same, alumina refining is the same, electrolysis is equivalent for aluminium smelting, remelting, refining is recycling, and then we have cast house, and semi-fabrication and manufacturing is equivalent to post-cast house activities.
Thank you, Klaudia. We have two more questions quickly. The first one is, the entity is doing in-house aluminium dross recovery. After the first round of recovery, we will send the balance to the external recycling contractor for further recovery. The aluminium that is recovered will be returned to the entity in the form of reclaimed ingots. In this case, is the reclaimed ingot recorded as the material intake? Would there be a concern of double counting?
So this, I believe, should be recorded under the outsourcing contractor section. And in this section also, again, we need to select the activity. So I think this would be over here. Yes, here actually, I'm afraid, yeah, we don't have this option. We don't have the dross over here. So I think for now, within the tool, it is not possible to record it. However, I mean, after the webinar, I can add some new options and adjust the tool if it's needed. However, if it would be included over here and if we would be able to select it, then also there is a transaction type. It's specifically for the outsourcing contractor. So there is an option that the material was sent to the outsourcing contractor and also that it was returned from the outsourcing contractor. So depending how we choose those transactions, if it was sent to the outsourcing contractor and then we didn't record following activity that the material was actually returned, if it would be just sent, then this material would be counted as an output. However, if we would also record a shipment that the material was returned from the outsourcing contractor, then everything is balanced and there is no double counting.
Thank you, Klaudia. So the next question, and I think this might be the last one, any questions that aren't answered in the live session, we will answer and respond to you. We have used the ASI specialist available on ASI's website to help with the CoC certification. I have their knowledge to be limited on the CoC material accounting tool. How can I ensure that individuals recommended by ASI are well familiar with the tool? Do these individuals get very detailed training by ASI?
So actually, we developed some materials related to material accounting system, and also we organized this webinar to make everyone familiar of how to use the tool. And if there is a need to, whether it's entities or auditors or registered specialists, whether there is a need to guide you how to use the tool more, then yeah, we are here to help you, and we can just drop us a message and we can think about it, and we can produce some more guiding materials.
Thank you, Klaudia. Very quickly, we can answer the very last question. Does the tool or ASI have a definition for these terms that you've just described? For example, electrolysis means smelting.
Yes. Very short, very quick answer, yes.
Perfect. Thank you very much. So with that, that wraps up our webinar today. Thank you all for joining. And I will hand back over to Klaudia for the wrap up.
Yes, thank you. Thank you very much, everyone, for joining. And if you would have more questions and you would like to continue this conversation about material accounting system, or you would like to ask some more questions regarding to the tool and you would like to receive some more guidance, then please feel free to email me. And for all the other questions related to chain of custody standard development or standard revision, which we recently started, please reach out to our standards director, Chelsea Reinhardt. So thank you everyone for joining, and stay tuned for our next webinars that will be coming soon. Thank you.